Hi, welcome to the Market Alert for Thursday, the 20th of March 2025. So yesterday, the Fed held rates, signals QT taper, blames Trump uncertainty for stagflationary outlook. Fed removes language that risk to inflation and employment are roughly in balance, usual rhetoric that you get from Powell. Interesting, this one here, signals QT tapering. So that means that they're actually going to stop buying the bonds back, or they're going to reduce it. So that's a bullish indication for the stock markets, because if you're not buying the bonds back, there's always room to start easing once more and to actually start printing once more as well. So no surprise, really. They've got to give the market some sort of support because they've been falling for the last 3 weeks. Wall Street reacts to dovish FOMC and the mini Powell put, which means he's got the downside covered. Market was looking for a reason to rally and seems to have found it, at least temporarily, with Powell commentary saying the right things. Again, it's all the usual BS, isn't it? Stocks and bonds, gold and crypto soar as Powell put appears. There hasn't been one for a while. People really like that when the Fed did the last QT taper. Absolutely, and they love it when they do QE as well. It's where the money ends up, in the stock market. US stocks and bonds were underpinned by post-FOMC. The Fed kept rates unchanged and slowed the pace of QT. And then finally, stocks and treasuries bid as Fed holds rate and slows QT. So you've got the support you want now for the stock market, and it's free to go on to make new all-time highs and turn around and head north. Economic news today. We've got claimant count change, average earnings. We've got Lagarde speaking later, and we've got the UK is probably the important one today, and that's going to be the rates. The rates are going to remain unchanged according to what the forecast is on the Forex Factory website. And Bailey is going to be speaking. I wonder if he's got a Fed put or a Bank of England put ready for the markets as well. Anything to help Rachel in accounts, I'm sure, as they both travelled to China last month to talk about financial matters, let's say. Right, let's have a look at the market's reaction to the Fed's FOMC meeting minutes last night and kick off with the Dow. So the Dow marching up nicely yesterday. Like I say, we're free to go to the upside now. The Fed has used rhetoric to underpin the Fed put. Reducing QT is absolutely perfect for the market, and you can expect prices to continue to start moving up. They started a few days ago. And today you can expect more of this. You might get a bit of a pullback to start with, a bit of cash selling, but now the market's got the insurance that it needs and assurance that the Fed's got the markets back with the tapering of QT. It's all smoke and mirrors as usual. So the market up at lunchtime, and then the Fed, there's the Fed put, and you can now see it starting to move back to the upside. So it's a done deal really for the stock markets now. Let's have a look at the DAX. And in the DAX, sideways at the moment, still a bit of pressure around here. As you can see, we've got some supply and a bit of selling for yesterday, but the market recovered. 30-minute chart is going to be the interesting part, and you can see there that we moved the lower, we bounced back, then we had the Dow, then the Fed, and now we're heading back to the DP and also the close. So it's got plenty of potential to get to the upside, and also if we look at the daily chart, to get back through the all-time high 23,478 and head towards that 24,000 target. And in the S&P, same thing, market moving up nicely, momentum's in the right direction, the Fed puts in, and there you can see up nicely. Just needs to take out yesterday's high, and now we can march to the upside. It's just the kicking of the can, isn't it? Eventually it will all fall apart, but at the moment it's as sound as a pound as far as the Fed, the Bank of England, the Euro Bank, all of them. They've still got control. So the insanity continues, as you see there, with the FT100 also moving back up there towards the 62% retracement. And in the 30 minutes, we sold off initially, as can be seen there. But as soon as we get to the Fed meeting minutes, the market's up. Obviously, pulling back slightly as the FT is waiting to see what Bailey has to say during today. US dollar, well, it loved it, didn't it? The market rallied up, and it's still pointing towards the upside there. What they've got to do is get the gold and silver price down, because that's becoming a bit of an issue. So let's have a look at those two commodities. And there you can see yesterday's indecision. We've got this overnight market also lower than yesterday's high. Get ready for the market to move back to the downside. Now the Fed puts lined up. The stock market's the most important thing to traders, not the metals markets, because they spell change and danger. So and inflation. So the market yesterday moving back up, but overnight already starting to struggle, stuck in a sideways range there. Same for gold, already starting to move lower there, which you can see had a good run. We need a pullback anyway, so that's not a problem. New all-time high overnight there at 3,057, and there you can see the market moving slightly lower. However, what I will say is that we've got a bit of demand coming in there at the moment. Price is holding, so if we can get back above these levels, then we'll continue to see the price move higher. However, silver, different ball game, and the reason for that is the gold-silver ratio. Let's have a look at that. So in the gold-silver ratio, we're still stuck in this sideways range. As you can see there, we've got plenty on the upside. We've been moving higher for the last 3 days, and we can continue to get back up to that 92 level, which will force the price of silver down. At the moment, it's showing that silver is trying to move up, as we've got a bit of red there. But don't be fooled by that, and tomorrow is Smackdown Friday as well, which they seem to be pretty consistent with hammering the price of silver down over the last few weeks on a Friday. Right, let's have a quick look at yesterday's market activity. And yesterday morning we saw a massive drop in the pre-market session. We were down 150 points before we even opened. And then, of course, you can see the cash market coming in, the activity there, moving prices back. And then we had a potential sell signal that failed. The market went down, and then it just reversed immediately off this. I'll just replay this. So there's the trade, just gets filled, and then bang through there. And then prices making their way up slowly. I have to say it was very painful. Then we had another buy signal, market trading up to the 200 MA, the DP, where it then started to struggle, and then eventually breaks through, and the close there, and then back and retesting the DP. So we moved through this resistance here, and then we traded to the close, and then the profits were taken in the market there. And then through the mid-morning, you see the retracement, and then the market becoming range-bound to lower. And then speaking of lows, you see the market go down and touch the low, which is quite incredible. So it hit the low from the previous day. The afternoon session kicks off with the morning session in the Dow, and then you'll see prices coming back above the low, because they want to get the market back above the low as much as possible, and even more so to break the previous day's high, like gold's doing at the moment. That means it keeps everything intact, higher lows and higher highs. So into the evening with the Fed, and let's just have a look at that. So there you can see the Fed keeping rates unchanged, and then the market being trading in a sideways move, and then moving up into the latter part of the Dow's trading session there, before pulling back again. They're stuck at that close and DP once more. So an interesting area there for this market. Then before coming really quiet as we went into the last half an hour of the US trading session there. So quick look at where we are overnight. And we're just making our way back. Bit of selling coming into the market there, which is just being ignored. You see there, big spike in the volume. Also some volume there to bring the market up as well. So yeah, market sideways. Let's compress the chart, have a look, see where we are in the bigger picture. So we've got to get through that DP and the close, which the market struggled with yesterday after it had already traded above and then came back. And also we need to get through yesterday's high to head up to that all-time high of 23, what was it? 23,478, isn't it, if I recall? Yeah, I think that's it. Let's just bring that down. Yeah, 23,478. So yeah, the market's got a bit to do, certainly, but nothing like the Dow or the S&P, where it's had a far bigger correction. This market is incredibly strong on the upside at the moment and continues to be that way. Bizarrely, given the state of the German economy, but then again, it's not about the economy anymore, is it? It's about manipulation, AI, and high frequency trading and algorithms. Nobody trades like they used to. It's all changed. Right, that's it for this one. Let's see what Bailey has to say for himself today, and see if the price of gold and silver can hold. I suspect not for silver, but different ball game for gold, given the geopolitical events and also the fast failing US dollar. Right, that's it. Have a great day, and as ever, thanks for watching. See you in the next one.